It's April 10th, 2014. Current time is 10:37 GMT. Jay Marsley here with the Daily Forex Trading Outlook. I've warned time and again yesterday about complacency. When things are quiet, this is when you have to be most alert. And we saw what happened yesterday with the FOMC minutes. I've got new charts being set up, so I only have the Euro charts today, but I want to talk about some other currencies. First, the Aussie, which broke into the 94s. It hasn't been above 95 since early November of last year. It's a far cry from the 85 the RBA was trying to push the currency to, and you can see how those with long-term shorts have gotten squeezed. So 95 is clearly pivotal on that level. I mentioned earlier in the week, and again yesterday, that sterling cable 168.22 was the major level. We got up to 168.20 and we backed off. Part of it may be from sterling yen, but the fact is it came very close to a major level, 168.22, and backed off. I mentioned that level yesterday. In dollar yen, confounding as after yesterday's stock close, everybody expected to establish 102 and it crosses the trade firmer. Instead, the opposites happened. Dollar yen 101.50 is clearly pivotal. Major levels 101.18. The 200-day moving average at 100.80, and the major support is 100.73. And a minimum has to stay above 101.50 to keep it away from those levels, but only 102 plus will break the momentum to the downside and say we've got a bottom. So watch 101.50 today, and just this, we call this the double currency for a reason, and it's performing that way. It's confounding expectations of 110 at the moment, even 105. So, but let's talk about the euro dollar, and this is I posted a scenario last night, and it's worked out actually very great. The key level is clearly 138.75. We got it within a pip of it today, but we didn't get through. As I mentioned yesterday, if that gets established, and I'll show that in a second, then we have a risk for the this area right here, where the high for the year is 139.67. That is that's a key level. You can see the power of the trend line. Trend line gets broken, boom, we go up at 138.75. My scenario yesterday was that we would 138.50 would be get a strong bid above it, but if below it, you'll see bid on dips between 138.20 to 50. That happened with the support at 138.35. Only below 138.20 would put 138 in play again. So anybody bought in that 20 to 50 level didn't make huge amount of money, but it did form a support. Got a bounce, got within one pip of 138.75, and that is the key level. So we're at a kind of a crossroads here. If we don't take out 138.75, we could back off. If we do take it out, then we will, make a press for higher, and I'll show you where that comes in. This is a 4-hour chart, and you can see by here, I drew this line, and I like to draw these lines because they give great reference lines here. We came right to this level here. So it has performed technically, but you can see in here, in the 139s, how much work we did here. Not that, really, probably one day, but 139.67. So if we take that out, we're going to come out and test that 139 plus level. If we don't, we come back and we stay in a range, but only below 138.20, which was yesterday's breakout level, will negate this move. I also mentioned yesterday, or the day before, actually, that I'm a fan of 1-hour trend lines. This one I drew, it kept the bias up, but these trend lines have not proved to be long-lasting. This is a long one compared to what we've seen most of these year, where these lines have been broken quite quickly. So we'll have to watch this 1-hour trend line to see if it holds. If it does, you'll have support on dips. So bottom line today, watch 101.50, watch 138.50. If it stays above, you get a strong bid, and if you take out 138.75, we're going to go at least to 139 and maybe into it higher to see if we can test that the high for the year. If we go back below 138.50, we'd have to go back below 138.20, put 138 in play again. 101.50 is key in the yen, 168 in sterling, and in Aussie, obviously 95 is a major obstacle. One thing, if you look at the bottom of this page, I wrote an article yesterday morning. Are you tired of getting jerked around? It turned to be a really timely article after the FOMC. I strongly suggest you read it. All you have to do is click on the link at the bottom, and you'll see the article on how to get access to it. So just click on this link down here. Good luck and good trading today.